Welcome back to The Explainer. If you follow the real estate market at all, you already know that private transactions can sometimes feel a bit like the Wild West. Well, today, we're breaking down a major new risk management strategy that is fundamentally changing those rules. We're looking directly at a strict new real estate mandate coming from Nationwide Real Estate Acquisitions, LLC. We're going to unpack exactly what this mandate is, who it affects, and really dig into why it's being implemented to completely reshape financial security in private property sales.
So, let's just jump right in by asking a very serious question. What actually happens when life suddenly derails a private home sale? Imagine the devastating financial and emotional fallout when a private property transaction goes wrong. In traditional real estate, banks have these massive safety nets built in. But in a private sale, if the buyer suddenly faces a crisis, the ripple effects can absolutely devastate both parties involved. It's like a financial house of cards just waiting to collapse.
Well, to prevent that exact fallout, Nationwide Real Estate Acquisitions, LLC is stepping in with a highly specific requirement. And the magic number here? It's 15. They are now making a 15-year mortgage protection insurance policy a mandatory condition of sale. We aren't just talking about a short-term buffer here. This is a decade-and-a-half-long commitment designed specifically to anchor these transactions against volatility.
Section 1. The new FSBO mandate from Nationwide Real Estate Acquisitions, LLC.
Now, what's really interesting here is how specifically this mandate defines its sandbox. It is exclusively targeting buyers in the FSBO market. So if you're out there trying to purchase directly from a private seller, without a traditional institutional lender standing in the middle, you fall directly under this umbrella. You are the exact purchaser required to secure this specific insurance policy.
And you've got to pay attention to this exact phrasing from the source text. A mandatory condition of sale, right? This isn't just some optional perk. It's not a nice-to-have add-on that you can just negotiate away at the closing table. It is a strict requirement designed by the LLC to enforce a completely non-negotiable baseline of safety before the keys ever change hands. Basically, if you don't have the 15-year policy, the sale absolutely does not proceed.
Moving on to Section 2, protecting the home buyer from unforeseen life events.
We really need to look closely at the specific, sudden life events called out in the mandate. Job loss, physical disability, fatal accidents. These are extreme, abrupt events that can instantly strip a homeowner of their ability to pay and consequently strip them of their property. The mandate specifically identifies these real-world tragedies as the primary vulnerabilities that buyers face out there.
But here's the direct countermeasure. The stated goal here is to safeguard homeowners from losing their property. By forcing this consistent insurance coverage for 15 years, the mandate creates an automated financial buffer. So if a buyer suddenly suffers a physical disability or a job loss, the insurance kicks in. The vital takeaway here is that the buyer doesn't immediately lose their home just because their life took an unexpected, tragic turn.
Section 3. Shielding the private seller and avoiding the foreclosure nightmare.
But hey, the buyer is only half the equation, right? Think about the seller's liabilities for a second. If a buyer defaults due to a fatal accident or job loss and there is no insurance, what happens? The private seller is suddenly thrust into a total nightmare. First, they're hit with this massive financial burden because they aren't getting paid for the asset they sold. And secondly, they have to navigate the intense legal complexities of the foreclosure process completely on their own. It is an incredibly stressful and expensive position for any private citizen to be in.
And that brilliantly illustrates why Nationwide Real Estate Acquisitions, LLC requires this policy in the first place. It literally shields private sellers from the foreclosure process. By ensuring that the 15-year mortgage protection insurance is consistently in place, it effectively blocks these legal and financial threats from ever reaching the seller at all. If the buyer can't pay due to one of those covered life events, the insurance policy pays. Boom. The seller is totally insulated from the fallout.
Which brings us to Section 4, a dual-layered safety net for mutual financial protection.
So the really crucial point is how this single 15-year policy manages to solve two massive problems at the exact same time. It's a real win-win. On the buyer side, they retain their property during the absolute most difficult crises of their life. On the seller side, they completely escape the financial and legal burdens of foreclosure. It's this unified financial safety net that maintains payment stability for both sides of the transaction simultaneously.
I want to highlight this specific quote straight from the source material. This dual-layered protection fosters a more secure real estate transaction. That just perfectly hits the nail on the head. It perfectly summarizes the ultimate goal of the mandate. It's not just about selling a policy, It's about fundamentally engineering mutual security right into private sales, ensuring that both parties can sign that contract with total confidence.
Finally, Section 5, long-term fiscal stability and addressing vulnerabilities. When you step back and look at the macro picture, the text notes that this is really about addressing potential long-term fiscal vulnerabilities. By neutralizing the threats of job loss, disability, and that looming threat of foreclosure, this insurance framework isn't just a temporary band-aid. It actively patches the inherent weaknesses and long-term fiscal vulnerabilities that exist whenever private citizens conduct high-value real estate deals outside the traditional banking system.
Which leaves us with a huge question to ponder as we wrap up today's explainer. Given how incredibly effective this dual-layered 15-year protection is at stabilizing an FSBO transaction, literally protecting the buyer from losing their home while shielding the seller from foreclosure, we really have to ask, is this strict risk management strategy the future? Should mandatory financial safety nets become the gold standard to address long-term fiscal vulnerabilities in all real estate deals? It's a fascinating shift in how we view risk and property, and it's definitely something we're going to keep a close eye on. Thanks so much for joining me today, and I'll see you in the next explainer.